Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here. Taylor Riggs is here. Sonali Basak in for Caroline Hyde. We're counting it down to the closing bell, and here to help take us beyond the bell. It's our global simulcast. We're joined right now by Katie Greifeld in for Carol Master, Tim Stenovec in for Tim Stenovec. We welcome our audiences across Bloomberg Television, Radio, and YouTube. Tim, a lot of buying here into the close.
A lot of buying, and it's interesting because we just chatted with Rebecca Corbin over at Corbin Advisors, and she's not looking at today necessarily. She's looking at the big picture. Every quarter, they survey 80 to 100 institutional investors, and the results of the quarterly research that's going to come out in July, she gave us a sneak peek of it. The sentiment is really, really low. She's essentially saying that none of those surveyed are expecting a raise in annual guidance, and that sentiment is downbeat. The management tone is increasingly bearish following inflation and slowing growth. So what's going to happen when we start to hear from these companies in a few weeks?
So a bad feeling, but a lot of late day buying, which is interesting because if we think back to where we were 24 hours ago, we saw the opposite. You saw stocks dive into the close, but today on what looks like to be some healthy volume, late day rally.
All I would say is we just had Jonathan Golub on here, equity strategist for the U.S., runs the quant team over there. And I don't want to call him a perma bull, Romaine, but he says from all the indicators that his quant models are showing him, things have not started to roll over yet. You're not seeing dispersion within the earnings estimates. Yeah. You're not seeing huge bankruptcies despite a little bit of a widening of the credit spreads. All of those signals would tell you that a recession isn't anywhere close.
Yeah, and I mean, look, maybe that's what people are betting on today. I mean, they heard what Jay Powell had to say. You saw this rally, the big rally that we had on Tuesday. That rally sort of extended into Wednesday. It faded as we got closer to the closing bell, but now a resumption here on this Thursday afternoon. The Dow Jones Industrial Average higher by almost 200 points, up about 6 to 0.7%. The S&P 500 higher by about 35, 36 points, up about, well, we'll round it up to about 1%. The NASDAQ Composite going to finish the day higher by about 1.6%. And even some of those cyclical names getting in on the action. Some of those small cap names, the Russell 2000 higher by 21 points or 1.3% here on the day.
On the S&P 500, we saw 336 stocks move higher and 166 stocks move lower, Sonali.
Yeah, and it's so interesting. If you take a look at what the sectors are doing here, Tim, you are not seeing everything in the green. You are seeing some sectors rise 3% or more. Consumer staples getting a bid, retailing getting a bid, utilities getting a bid here. I do want to talk about the decliners here because energy, the most loved sector of the year, declining here more than 4%, and banks about 1.6% on a day where we will see stress test results come out today and capital plans eventually be released.
And before we get there, let's take a look at the gainers because I want to talk about Clorox. It's had a huge rally this week. It's up another 6% today. That's its best day since March 2020. And what's interesting is that it's really not on the back of any real meaningful news. I mean,
yeah, is this supposed to comfort me? That
I was going to say, is this like some sort of signal that we're
I don't know. It's been rallying all week.
Should I go back and start buying masks again, too?
Perhaps you should. This is Clorox's fourth straight day of gains. I'm not sure why. You had Wells Fargo actually lower the price target on this stock on Tuesday, but still a big rally. Again, Clorox up 6% today. Who knows? But let's also talk about Lennar because it's also up for a fourth day. We all know that the home builder reported earlier this week. It has started trimming prices in some areas of the U.S., but overall, it beat expectations, and traders clearly still jazzed about it because Lennar rallying another 4.5% today. And I want to end with Whirlpool because Goldman Sachs, it cut its price target on this stock from $235 to $202. That's still a 30% or so increase from where we are. And Goldman maintained their buy rating on this stock. That may be why Whirlpool rose 7% today.
Yeah, we should point out FedEx earnings are crossing the wire right now. The company coming out with their fiscal fourth quarter numbers, adjusted EPS for that quarter coming in at $6.87. That's right on the nose of the average of analyst estimates surveyed by Bloomberg. Revenue for the quarter coming in at $24.4 billion. The street was looking for 24.57, so a little light there, but all in all, pretty much not far off. Here's your forecast: 2023 fiscal year adjusted EPS, the range 22.50 to 24.50. The street was looking on average for 22.36. The company also says that its 2023 capex spend is going to be at about 6.8 billion, which is right around what the street was looking for. So all in all, most of these numbers look to be relatively in line with what the street was looking for, and you're seeing the shares in the after hours bouncing a little bit higher here, up right now 4 to 5%.
All right. Let's talk about some of the decliners, Romaine. You went through the numbers there with FedEx, and investors obviously optimistic in the after hours after getting those numbers. Pessimistic about some of the companies that I featured today, specifically United Airlines, finishing the day down by 2.5%. The company is going to temporarily cut about 50 daily flights out of Newark as it looks to ease congestion during the busy summer travel season. I'm set to fly out of Newark tomorrow. Fortunately, my flight hasn't been cut yet.
Cross your fingers.
But I got some bad news because Newark has for years been one of the most delayed airports in the nation.
I mean, who flies out of Newark? What's going on there, dude?
You guys do we have time for a quick story? When I got married 5 years ago, a bunch of people from the East Coast weren't actually able to get to my wedding because all their flights were canceled. So those rock stars drove across the country.
You have better friends than me.
All
Yeah, they must
for
really
the
like
Tim
you.
Stenovec wedding.
A lot of them were family, so they kind of had to do it. That's what they told me when
Doesn't
they
count.
arrived, after 14 hours in the car. Airbnb finishing the day down by 3.8%. Shares fell after Morgan Stanley cut its price target, not just on Airbnb, but some other travel stocks. Those included Booking Holdings and Expedia Group. This is interesting. Morgan Stanley is concerned that it's cautious about travel demand moving forward. So if people are paying so much for airline tickets and for gas and for other expenses that are going up because of inflation, are they going to be traveling less? Morgan Stanley certainly thinks so. And here's one that's not based on any fundamentals. Revlon finished the day down by 11.5%. As of yesterday's close, it was up close to 600% in the previous 6 trading sessions. Kind of the return of the retail trader meme stock, kind of what we saw with Hertz back in the summer of 2020, with investors hoping to make a quick dime there.
Let's take a look at full faith and credit, Tim, because it certainly was a risk-off mode. Well, risk-on mode, I should say. But what's been so interesting is sort of the correlations that we've been looking at lately. And, of course, today that breaking down, buying both into bonds and equities. I've been focusing a lot on the 5 end of the yield curve, the belly. That's where a lot of the movement ones. There was a huge sort of tips auction, Tim, that happened earlier today, and that actually did pretty well. And so you are seeing some buying come in, and you do wonder if that signals maybe peak in yields as you're starting to get some demand there, which frankly, you haven't seen these types of yields since about April of 2019. Further down on the yield curve, you're still getting some movement. And I think, Romaine, what this signals to me is I'm not sure what cues to take from a bond market. Yields have been falling significantly for the past few days.
Yeah, and I want to quote somebody. For some reason, I can't remember exactly who said this, so forgive me for stealing this. But it was talking about this idea that we're sort of past this sort of stage of sort of a binary outcome here when it comes to economic conditions as well as market conditions. And that's why you kind of see these swings back and forth. Everyone's sort of looking for that sort of binary proposition, but it's just not there. I mean, whether we're headed for a recession or not, that's not really the question. The question is sort of what economic conditions look like over the next, 6 to 12 months and how companies are going to be able to adjust to that, how consumers are going to be able to adjust to that. And if you ask 10 different people that question, you're going to get probably 12 different answers.
And I think that really speaks to sort of the market action that we've been seeing. I mean, if you look at this S&P 500 up strongly today, but those gains could easily disappear tomorrow. I mean, there's so much intraday volatility, and I think it all comes back to that question of what is this going to look like? And there's not a really neat and tidy answer.
It's interesting, Katie, because when you think about volatility, of course, I watch it super closely because it has so many ramifications to the market more largely. The VVIX, so volatility is actually down a little bit on the year. Looking for some positive signals there because, of course, there is a point where volatility starts to get worse for everybody, right?
Yeah, I want to go back to what Romaine said about the possibility of a recession and speaking to, 10 or 12 different people and getting 10 or 12 different answers here. One thing that we can't forget is a recession is a normal part of an economic cycle.
Yeah.
And the question is it's not just the policy response to a recession, but it's how deep that recession is and how long that recession is and what the recovery from that recession looks like. Because if that recession, results in, only a couple percentage points of gains of unemployment on the unemployment rate, then that's not a very deep recession given where we are when it comes to the number of people
and we're
in the US
focusing
who
a
are
lot
employed.
here on the U.S., but real quickly, though, I do want to go back because one of the most read stories on the terminal today is actually the commentary that we heard out of Robert Habeck he's the economy minister in Germany. And he was talking about the big disruptions, of course, from the Ukraine war and the flows of natural gas into Europe, specifically into Germany. And he's now drawing a lot of parallels to the Lehman collapse and the idea that there is systemic risk, real systemic risk out there, real contagion risk out there from what's going on in Europe, and the idea that it wouldn't be contained to just Europe, just Germany, that it could actually become a global issue, including for the United States. I'm not sure I buy that, but I do think, he's a lot smarter than me. He probably has a lot more degrees than me. So maybe he's seeing something that the rest of us maybe haven't quite come to terms with.
Just to quickly pick up on what you said about contagion risk, I know that here on TV we'll be following a little bit of those stress tests when you think about the lack of systemic risk that maybe those now pose relative to 2008 and the calmness perhaps that comes from some of those stress tests unlike maybe 10, 15 years ago.
Yeah, we'll also be bringing you the results of those stress tests later today when we do here.
On radio.
Yeah,
That'll be interesting. Maybe we could compare later who did it better.
That'd be fun.
Yeah, that sounds good. Yeah.
They had me
we can do
today.
that. That's true. We do have Sonali helping break it down. Not us on radio. We got Katie today helping out. That is going to do it for our cross-platform
Is there
coverage
like a stress
today.
test ETF or something that Katie's covering?
Soon, probably. There's probably a fund.
I want the inverse of that. How about that? Triple leverage.
Triple leveraged inverse. We'll make it happen.
All right. Stay tuned because tomorrow, same time, same place, you're going to catch us again for our simulcast of Beyond the Bell on Bloomberg TV, radio, and YouTube.